Do you know what the federal government has done for Social Security for 2024? In other words, the changes that they've made? Hi, I'm Doug Ray, president and founder of the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne, and you've entered The Vault, the Wealth Guardians video series on all things pertaining to retirement planning. Every year in October, the federal government gives out all the changes for Social Security taxes and laws. In this episode of The Vault, we're going to cover what those changes are for 2024, since it's October. Don't forget to hit these like and subscribe buttons down below the screen here if you want to catch future episodes of The Vault with Doug Garrett and myself. Okay, Doug, let's go ahead and get to it. It's
Sure.
October. What changes do we see?
Well, what you're looking at right now is the fact sheet that is published by the Social Security National Press Office. You can certainly go download it yourself if you'd like to. Everybody, I think, Brice, looks to what is the cost of living adjustment going to be?
That's the big one, right? That's what everyone wants to know.
Absolutely. So for 2024, it's 3.2%.
It was 8.7 last year. It was 5.3 the year before that. So we've had some pretty decent ones in the last couple of years. But Doug, talk to us about how on earth is this calculated?
Yeah, they don't just use the Consumer Price Index.
Of course not.
I think is kind of fudged a little bit anyway. They use this animal called the CPI-W.
Okay.
The CPI-W takes into account urban wage earners. And the calculation's a little bit complicated. I'm not going to get into that. But what they're looking at is things like food. They're looking at clothing. Housing, some transportation. But Brice, what do they not calculate?
Oh, kind of two important ones, Doug.
Yeah.
They don't include energy costs, and they don't include medicine costs or medical costs. Aren't those two those two expenses something that your average retiree would be engaged in?
I think that's a pretty big part of their budget.
And we all know that energy and medicine are two of the leading aspects to inflation, right?
Exactly.
All right, so maybe not real fair there.
All right, let's move on to tax rate. In other words, this is how much they take out of your paycheck every pay period to fund Social Security and Medicare. So if you're an employee, they're going to take 7.65% out of your paycheck. 6.2 of that goes to Social Security, and 1.45 goes to Medicare.
Okay.
Now, if you're self-employed, remember, your employer, if you're employed, pays half and you pay half. But if you're self-employed, like we are, you got to pay it all. So that's 15.3%.
That's right. Now, those two numbers right there, we didn't see it increase last year, and I don't remember the last time that we saw those percentages increase. But, Doug, I suspect those will be numbers that we'll be seeing increasing as the years go on, as Congress realizes that they've got to do something to fix the funding for Social Security. Agreed,
and I think the next topic we're going to get to, they're going to increase that as well.
This one as well, yep.
So right now we're going to talk about the maximum taxable earnings. So in other words, in 2023, once you made over $160,200, they stopped taking that 6.2% Social Security premium out of your paycheck. Now, the Medicare part, the 1.45%, that is unlimited. So you can make $1 million, $10 million a year, and they're going to still take that 1.45% for Medicare. So the change for 24 is it's gone from $160,200 to $168,600. Brice, I can easily see them taking this up to, say, $300,000-$400,000 easily.
Easily. In the next couple of years, they will probably have to. Yeah.
Yep.
So if you are still working and you make money over that amount and you haven't been taxed on it in the past for Social Security, you very well might be in the future.
Yeah.
Okay, moving on.
All right, let's move to another important topic. It's called the earnings test.
Yes.
And this applies to folks who have filed for your benefits but not yet have reached full retirement age and are still working.
So let's say your retirement age is 67.
Right.
Okay.
So that means once you go over a certain income threshold, for every $2 above that, they will take $1 of your benefit from you. Now, it's not a permanent takeaway.
Right.
Once you turn full retirement age, they're going to figure out how much they took from you And sadly, they're not going to pay it back as a lump sum. What they're going to do is pay it back to you over your life expectancy every month. So the earnings test for 2023 was $21,240. They have bumped it up to 2024 to $22,320.
That's good. People like that. They like to be able to earn a little bit more if they're under the full retirement age and have already filed for Social Security. Now you can earn a little bit more before they start deducting that from you.
And the last thing I want to talk about is the maximum Social Security benefit at full retirement age. In other words, what they do to calculate your full retirement age benefit is they take the highest 35 years of earnings and they apply a difficult calculation to it to come up with that.
The Amy.
Yeah. So, and we're not going to get into that. We've had other Vault episodes where you can go back and review those. But for this particular situation, if you paid into Social Security and you maxed it out every single year, those 35 years, for 2023, your maximum full retirement age benefit is $3,627. For 2024, it goes up to $3,822.
So, Doug, what that means is that when we sit down with somebody and help them figure out what the best Social Security filing strategy is for them, the most that we would ever see somebody have a benefit at full retirement age has been the $3,627. If we see that number on their Social Security statement, we know that they earned that $160,000 or so for 35 years. Now it's going to go up to $3,822. So we'll see that number at full retirement age. But one thing that's not mentioned on here that I want to point out that we have observed is that for those who are choosing to wait until age 70 to file for Social Security, because you get roughly an 8% a year increase in your benefit if you wait until age 70. Now, because of the 8.7% increase, COLA increase that we saw last year, now we are seeing that age 70 benefit for those who have maxed out their Social Security earnings throughout all the years. That is now over $5,000. We had never seen it over $5,000 before.
Yeah, it's pretty amazing. Remember, you can download this fact sheet yourself if you want to. We didn't cover everything. We didn't get into the disability changes because not everybody gets Social Security disability. So please remember that.
Yeah, it would have been too long of an episode if we covered everything, but these are the main points here. That's going to wrap it up for this episode of The Vault. Again, don't forget to hit these like and subscribe buttons down below if you want to catch future episodes of The Vault with Doug, Garrett, and myself. I want to remind you all, financial plans do not create themselves. I'm Brice Payne.
And I'm Doug Ray.
And this has been The Vault.